NIO is one of the phenomenal players in the Chinese EV market. Also, NIO stocks are trading at an impressive valuation. In a competitive market like that of China, the automakers have established a better stance than their rivals. Hello folks, welcome to yet another exciting video. Before we begin, don't forget to hit the subscribe button and turn on the post notifications so that you won't miss out on any of our upcoming videos. Did you know that the global EV sales have totaled up to about 6 million units for 2021? About 2.9 million units of it came from the Chinese market. Investing in Chinese stocks wasn't much favored by the investor community. For some reason, this skepticism was developed by some key developments that took place last year. However, the roadmap of NIO looks pretty good from the get-go, so we can obviously say that NIO will attract investors globally, as NIO competes with some of the established automakers like Tesla, BYD, along with newbie startups like Li Auto and XPeng. There's no need to specify that the competition is pretty intense. Legacy automakers like Volkswagen and General Motors are also putting up tough competition like the rest. All of the competitors are looking forward to acquiring a portion of the fast-growing Chinese EV market. The much-anticipated brand-new luxury sedan ET7 of NIO is scheduled to begin in March. Let's look into some of the sales figures. In November 2021, BYD sold about 90,546 EVs in the Chinese market. NIO also sold around 10,700 vehicles. At the same time, Tesla sold 52,859 EVs in China in November. Since its first car launch in 2016, the company has come up with so many great reasons to like it. So far, the delivery figure of NIO is over 156,000. In 2021 itself, NIO managed to deliver 80,940 cars. Looking into the figures, we can say that the sales growth indicates a robust demand hike for the brand vehicles. In terms of both revenue and its growth, NIO is a top player among other pure-play EV ventures. If you look into the statistics, we can conclude that BYD gathers up only a little more than half its revenue from selling vehicles. While we're at it, did you know that a few factors distinguish NIO from the rest? To begin with, NIO's BaaS or Battery as a Service model enabled consumers to swap car batteries with its new ones at any of the swapping stations set up by the company. So, within a short time, the users can swap their discharged batteries. Another fact is that they can choose to swap batteries and go for a smaller or bigger battery pack based on specific needs. Notably, above 5.3 million battery swaps were achieved so far due to the demand. Secondly, NIO is preparing to launch two of its new models, the ET7, a luxury sedan, and the ET5, a mid-size sedan. On top of that, the company will launch a third new model in 2022. Also, not many automakers are planning to launch new models this year. These models are presumed to be among the best in their target sentiment. Collaborations with multiple companies are a good add-on to any company's portfolio. Hence told, in the third quarter, Van ECK Associates Corp grew its holdings in NIO by 16% based on the 13F filing with the Securities and Exchange Commission. The venture owns about 475,000 shares of NIO stock and have purchased 67,000 shares during the quarter additionally. The Van ECK Associates owns holdings worth more than $16 million in NIO according to the recent filing with the Securities and Exchange Commission. Due to its impressive roadmap and product launches, multiple institutional investors have boosted their holding in NIO, giving it a more positive outlook. At the same time, the Deutsche Bank agent expanded its stance in NIO by about 56%. They own about $5 million worth of shares in NIO and bought additional shares worth $2 million in the last quarter. That pretty much sums up institutional investor interactions surrounding NIO stock. NIO shares spiked up by 5.65% in pre-market trading yesterday following the release of fourth quarter deliveries. The stock bounce was followed by a 19% plunge in December. It was in fact the worst monthly performance after the stocks tumbled by 19.7% in February. Over the weekend, NIO managed to deliver 10,489 EVs in December, which is about a 49.7% hike from last year. In short, it lifted the deliveries in the fourth quarter by about 44.3%. Looking into the 2020 sales record, the automakers managed to deliver 91,429 cars, which is a boost of 109.1% from 2020. The fourth quarter announcement came right after another China-based automaker, XPeng, revealed their deliveries rose by 222%, and Li Auto revealed that their deliveries hiked up by 143.5%. Alongside Tesla also made record deliveries well above expectations and exhibited a hike of 13.53%. The Chinese EV makers hit big delivery figures and NIO stocks surged the most. NIO began 2022 with a bang. NIO, XPeng, and Li Auto made a combined delivery of more than 40,000 units. NIO stock, similar to its other rivals, reacted to the delivery news yesterday and traded positively and then pulled back by mid-morning. Falling subsidies is a factor that every investor will have to consider before buying Tesla or any Chinese EV maker shares in 2022. However, higher December deliveries mean that earnings for NIO and the rest of the Chinese EV makers will move up in the coming weeks. Okay, in a nutshell, more car means more sales and better bottom line results than expected. Strong deliveries results also can help shares to bounce in 2022. In 2021, NIO shares struggled due to starting valuation, but the company managed to acquire a market capitalization of about $54 billion. XPeng and Li Motors have a market capitalization of $43 and $33 billion respectively. Although 2021 was indeed disappointing for NIO regardless of its boost compared to previous years, the Chinese EV makers started the year off on the right foot. Is NIO stock a buy? While we do have a list of well-performing stocks, we need to be specific about whether NIO is a buy or not. On that note, NIO is currently trading at a forward price-to-sales ratio of about 4.6. The metric looks similar to the rest of its peers, including Li Auto and XPeng. As we mentioned earlier, NIO couldn't exhibit a great stance in 2021, but it seems like the ratio will improve much higher in 2022 than the previous year. BYD stock is also trading currently at a price-to-sales ratio of about 3. As NIO has just begun hitting some pretty good records over years, the price-to-sales ratio is a better metric that can be used to compare its valuation proximate to its peers. Notably, a lower ratio is evaluated better. Also, the NIO stocks are looking much better in valuation than other US EV companies like Lucid or Rivian, and these companies could only deliver a few hundred vehicles so far. While also performing well in the domestic China market, NIO is also targeting to expand European markets. The company will kick off its delivery in Norway in September, and it's figuring out to enter 5 more countries this year, which will probably increase the company's reception across the globe. And if the expansion company that it has been plotting succeeds, NIO will indeed emerge as a top EV maker capable of meeting the global quality standards. Despite experiencing intense competition from every side, NIO has been growing its sales remarkably. Its roadmap includes upcoming models, growth plans, and offerings stances it's well for long-term growth. In short, NIO in fact looks appealing right now due to all the right and obvious reasons. NIO is attempting to rebound and hit great milestones this year. Okay, with that we've come to the end of the video. Thank you for watching. If you found this video informational and wish to see more content, please hit the like button. Do let us know your opinions in our comment section. Don't forget to subscribe to our channel and make sure to turn on the post notifications so that you always get notified whenever we post a new video. Till then, keep watching our other videos. We'll see you guys in the next one. Goodbye.